Hello traders, Gary Wagner here, just about 12 noon in Honolulu, 6 o'clock in New York. It is Tuesday, 14th day of July 2020, and this is the daily report for gold and silver. We saw gold definitely trade under pressure overseas last night, taking it to an intraday low of 1791.60. The recovery was brisk and strong, with gold closing back above 1800, currently trading at approximately 1812. On today's technical studies, we will take a look at our current trade, our support and resistance levels, and speak about the recent rise in gold and why I feel it has risen in a very orderly manner. But first, to the price board. After breaking below $1,800 today and actually trading to a low of $1,791.10, renewed tension between the United States and China, as well as continued concerns over the global pandemic, have taken gold well above 1,800, currently at 1812.90. That is a net decline on the day of $1.20. Spot gold also broke below 1,800, trading to an intraday low of 1790.60, currently up $6.65 at 1808.90. And we are going to begin to look at October gold, which is going to be the next most active contract month, currently at 1825.10, down $2.70 on the day. We had big declines in both platinum and palladium. Platinum lost $23, over 2.5%. Palladium lost almost 2.5%, a $50 decline, currently fixed at $19.90. And lastly, silver lost 0.75%, a 15-cent decline, taking the most active contract month to $19.64. And that was all in light of a fractionally lower U.S. dollar. Even with the major price swings that we have seen recently in gold, I believe that it is rising in an orderly and methodical manner. And what I mean by that is it seems as though we get an area of consolidation such as we got here. This was, of course, an extended sideways market. And then from there, you get a move to the next level. That would be this level here, when the former resistance at 1760 then becomes a level of major support. Once again, you get the market begin to consolidate or trade sideways at this new higher pricing. And then, once again, we get that spike, in this case above 1800, with resistance at 1830. Now, one thing for sure is that today's move was challenging in that it did briefly break through our lower trend line that we have created by just going through the various lows in the marketplace. And you can see that today's low of 1791 certainly broke through. But again, when we look at the body of today's daily candle, we can see that it opened and closed above 1800. It also closed above its opening price, and that's why we're getting a green candle. So we have maintained a price point effectively above 1800, and I believe we're seeing that consolidation once again at this new higher price point that effectively is at 1800 to about 1830. So when we consider that we have seen the market consolidate, spike higher, consolidate, spike higher, and do that again, to me, this is the kind of upward ascent that we want to see, because this orderly progression to higher pricing means that these new prices seem to be solid and that we will hold the level of $1,800 per ounce and move up and to higher ground from there. Over the last couple of days, we have been looking at this 240-minute candlestick chart and the channel that we currently have gold trading in. We have a lower band based upon a series of lows and a higher band based on these series of highs. Now, unquestionably, today's trading activity broke below that channel line. It broke below support. However, it did manage to close back in the channel itself, and I believe that that is a very healthy sign that we are going to see prices continue to rise. It is for that reason that my recommendation is to maintain your current long position in both futures at 1807 and a half, maintain your current stop, as well as your Forex trades for those that are trading spot gold. As you know, we have been on record recommending both GLD and Nugget as a rebalancing of your overall portfolio to have it weigh more heavily on the safe haven asset gold. We saw Nugget move up by 7.32%, 85.94, and what we're seeing is a strong piercing line. It is coming after a defined downtrend, but a very, very short one. I am looking for both Nugget and GLD to move higher. GLD gained about 0.5% in trading today. 170.19 is the current print after factoring in today's gain of 79 cents per share. And traders, although silver sold off by about 15 cents today, when we look at this weekly chart, you can see why I continue to be extremely bullish on the precious white metal. Effectively, once we broke above this key resistance level at 1900, 1906. That also corresponds to the 23% Fibonacci retracement. This retracement set is from 2125 down to these lows at 1174. So this is a key number. It also matches with this top here. We effectively had an intraday high that moved above it, but not on a closing basis. So we really have to go back to this candle right here, which is the last occurrence, October of 2016, when we had silver trading at this high value. I am still looking for silver to go anywhere between $20 on the low side and $21.25, $21.50 on the high side. Therefore, traders, I am recommending all of our subscribers that have long positions in silver to maintain those positions and look at the targets we just spoke about as an exit strategy. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.